Let's connect with Michael Every, Head Financial Markets Research at Rabobank. Good to have you on board, Michael. And clearly, on rate cut hopes, you can see the global markets or Dow really at a record high.
Well, yes, you can see that. And let's all wave flags and let off fireworks and pretend everything's okay, shall we?
This is the longest economic expansion, what I've been told, we've seen in last 100 years for the US economy. When it became 8 years, a big question mark was raised. However, 8 has become 10 and there is no evidence of a recession. So do you think it's one of those stories which my mother told me when I was a kid, that the wolf will cry? And is that the situation of the Wall Street bearish analysts right now, that they'll keep on crying, complaining about what's happening to US economy, but US economy will surprise us?
Well, I mean, the longer any cycle goes on, and by the way, this is now the longest in US history, full stop. It's not 100 years. It's since the creation of the United States. This is the longest economic positive cycle. But the longer anything goes on, the nearer you are to the end of it, obviously, by very definition. And you are getting warning indicators right the way across the board, whether you're looking at construction spending in the US, which is now down, factory orders, which are down, worries over the impact on the supply chain from the trade war, the housing market, which is looking a bit wobbly, and most importantly, key technical indicators such as the entire US yield curve being lower than Fed funds. So, the equity market is making so many epic errors here, as it is, prone to in the US in particular. First of all, if you're saying this is the longest cycle, as I said, you're nearer to the end of it than the beginning. If you're going to be thinking that earning multiples, are going to be looking positive from here on future earnings when you're that far into a mature cycle, I really think you need to start thinking about, what logic suggests in the other direction. And importantly, if the US yield curve is all below the rate of Fed funds, this isn't a positive thing that the Fed are about to cut rates to juice the equity market, even though that's what they would very much like to do. It's the fact that the bond market, which is far more intelligent than the equity market, is screaming that the Fed has been making an error for a very, very long time. And the Fed is desperately late trying to rectify its error. And I think it will be too late.
Michael, how does one really understand, appreciate and participate? Because if you're not participating, you are missing on a strong bull run. And if you're participating, the fear is that, are you participating too late?
Well, I mean, we've got one simple strategy point, and it's the same one we saw, by the way, in the run-up to the global financial crisis for several years. It's exactly the same strategy. Buy everything, buy absolutely everything, but then be prepared to sell everything except US Treasuries. Because basically that's all that's going to have any serious value when the fireworks really start going off. In the interim, buy anything you want, because the way the central banks are attempting to show that they are in control and the market is misunderstanding what's actually going on will mean you'll get upside in just about everything. But sooner than people realize, the game will change rapidly, just as it did into the global financial crisis, and you'll only want to be long really quality government bonds.
Okay, great to have you on the show. Thank you much for taking the time out and speaking with us today. For us,